Okay, let's unpack this. We're diving into a really interesting story. It sits right where traditional public companies meet, digital assets.
Yeah, it's a big one. A real headline grabber.
Totally. This company, SharpLink Gaming, making a huge bet on Ethereum. We're talking nearly $500 million.
That's right. So for this deep dive, we're looking specifically at their acquisition of over $460 million worth of ETH. Why they did it, what happened.
And we've got the company's own announcements, their financial data, plus news reports covering the deal and the market reaction.
Exactly. Our goal is to pull out the key stuff from these sources for you. Like, what did SharpLink actually do? Why did they say they did it?
Yeah.
And then there's the market reaction, which was, well, pretty wild.
Yeah, wild is a good word for it.
Yeah.
And what it all might mean. So let's get into it.
Okay.
So first off, the scale. This is a big move. SharpLink Gaming, their ticker is SDS. On Nasdaq, they bought 176,271 Ether.
Yeah, that's a lot of ETH. At the time they locked it in, the sources say it was valued at $463 million.
Right, and buying that much, well, it can cost money. How did a company like SharpLink pull that off? How'd they fund it?
Well, the sources mention a couple of methods. They used private placements and also these at-the-market equity sales.
Ah, okay. So ways to raise cash by selling company shares, basically, either directly to specific investors or just gradually on the open market.
Exactly. And they specifically raised about $79 million just since May 30th as part of that push.
Got it. So selling stock to buy Ether, did they say what average price they paid per coin?
They did, yeah. The average price for that whole batch worked out to $2,626 per ETH.
Okay. And after buying all this Ether, SharpLink made a pretty significant claim, didn't they, about their position?
Oh, definitely. They came out and said that this purchase makes them the world's largest publicly traded holder of ETH.
Right. That publicly traded part seems key. We'll come back to that. But first, the why. Why does a company mostly known for, sports betting tech suddenly pivot to holding so much Ether?
Good question. And this is where their strategy comes in. According to their statements, they plan to treat ETH as their, quote, primary treasury reserve asset.
Ah, okay. So shades of MicroStrategy, but with Ether instead of Bitcoin. That's what comes to mind immediately.
That's exactly the comparison the sources draw. They're pretty openly following that playbook, but swapping BTC for ETH. And they're positioning themselves, SBET, as the first Nasdaq company to adopt this ETH treasury model.
So the goal is to give their shareholders meaningful economic exposure to ETH, linking the stock price partly to how Ether performs.
Precisely. And they brought in a heavy hitter to comment on this too, Joseph Lubin, SharpLink's chairman.
Wait, Joseph Lubin? Isn't he one of the co-founders of Ethereum itself?
The very same. And he's quoted calling this move a pivotal milestone. He sees it as a, quote, innovative approach for institutional adoption of ETH. So yeah, a big endorsement from a key figure.
Okay, so they buy this massive amount of ETH. Is it just, sitting in cold storage somewhere, or are they doing something with it?
No, not just sitting there. And this is another interesting layer to their strategy. The details say over 95% of it is actively deployed. Staking and liquid staking platforms.
Staking. Hey, okay, that's central to how Ethereum works now, post-merge. Can you give us the simple version for anyone listening?
Sure. Basically, instead of mining like Bitcoin, Ethereum uses staking. People or companies lock up their ETH as collateral to help secure the network, validate transactions, make new blocks.
They get rewarded for that.
Exactly. They earn more ETH for contributing. And liquid staking is just a way to get a token representing your staked ETH, so you still have some flexibility while the original ETH is locked up doing its job.
So SharpLink isn't just holding. They're actively using their ETH to earn more ETH and support the network.
That's the dual purpose the sources highlight. Earning yield, yes, but also contributing to Ethereum's security and stability. Lubin apparently emphasized this too, contributing to security and trust while, quote, earning additional ETH for that work. It's active management.
Right. That active part is key. Which brings us back to that claim. Largest publicly traded holder. We need to unpack that a bit more carefully based on the sources.
Yeah, context is important there because, $463 million is huge for a company's treasury, but it's not the biggest pile of ETH out there overall, right? The claim is specific.
Specific how? Largest publicly traded company doing this.
Exactly. That's the distinction. They're separating themselves from other entities.
Like who? Who else holds a lot of ETH?
Well, the sources point to the Ethereum Foundation, for example, the nonprofit supporting Ethereum's development. They apparently hold more, around 214,000 ETH, worth closer to $594 million at the time.
Okay, but the foundation isn't a for-profit publicly traded company like SharpLink.
Right, and then you have the big crypto ETFs, exchange-traded funds, like BlackRock's iShares Ethereum Trust ETF. That holds way more. The sources mentioned something like 1.7 million ETH, worth billions.
But again, a crucial difference. The ETF holds that ether for its clients, the people buying shares in the ETF. It's not BlackRock's corporate treasury money.
That's the key distinction the sources make. SharpLink's holding is unique because it is their primary corporate treasury asset. So within that specific category publicly traded company, holding ETH as treasury, their claim of being the largest seems to hold up based on the info we have.
Okay, that makes sense. Important nuance. Now, the market reaction, this is where things got dramatic. How did Wall Street initially react?
Initially, explosively positive. The reports say SharpLink's stock price just soared more than 400% after they announced the ETH strategy back on May 27th.
Wow, a 400% jump. It's huge. But it didn't last, did it?
No, not at all. Things went south just as fast. There was this really sharp reversal. After they announced an SEC filing, an S3 filing, the shares just plummeted, dropped about 73% in after-hours trading.
73%. So the sources say it went from, over $32 down below $8? Ouch. That wiped out almost all of that huge gain.
Yeah, a brutal turnaround. And the reason, according to the reports, was basically a misunderstanding about that S3 filing.
A misunderstanding. What was so scary about an S3 filing?
Well, an S3 is a registration statement. It allows a company to potentially sell shares later. This specific one covered nearly 59 million shares that had already been issued to private investors, PIPE investors.
So it allows those investors to potentially sell their existing shares on the open market in the future. It wasn't the company suddenly dumping new shares or insiders cashing out.
No, exactly. The sources stress it wasn't an actual sale happening now. It was just the standard regulatory step needed to make those already existing shares held by those specific investors eligible for potential resale down the line. But the market, well, it seems the market freaked out.
Wow. So the market interpreted a routine filing as something much more negative and hit the sell button hard.
Apparently so. It really shows, how sensitive things are and maybe how unfamiliar traditional markets still are with navigating the specifics around companies heavily involved in crypto assets.
Yeah, that volatility based on a filing misunderstanding is pretty telling. Zooming out, the sources kind of put this whole SharpLink saga into a bigger picture, right? A broader trend.
Yeah. Yes, absolutely. They frame it as part of this growing move towards corporate crypto treasury adoption, following in the footsteps of MicroStrategy's Bitcoin strategy, but making Ethereum the focus for SharpLink. Okay,
so let's try and wrap this up for you, the listener. SharpLink Gaming makes this huge strategic play, buys $463 million in ETH.
It declares it their main treasury reserve asset, just like MicroStrategy did with Bitcoin, but, with ETH.
And they're not just sitting on it. They're actively staking over 95% of it, trying to earn yield, contribute to the network security.
Right, an active strategy. And they claim they're now the largest publicly traded company holding ETH this way, which seems technically correct given the distinctions from, say, foundations or ETF.
But then the market reaction, absolutely wild, huge surge initially.
Followed by a massive plunge, triggered, it seems, by a misunderstanding of a pretty standard regulatory filing. Not actual selling, but the potential for future selling by existing investors.
It's really a story about corporate strategy, meeting digital assets, ambition, and just intense market volatility fueled by interpretation.
So what does this whole chain of events, the big buy, the staking, the huge stock swings based on a filing confusion, what does it tell you about how traditional finance is trying to get its head around crypto?
Yeah, when you see a market react so strongly, first up, then sharply down, based on what seems like a misread of a technical filing, what does that really reveal about Wall Street's current ability to understand and value these kinds of digital asset strategies? Definitely something to chew on.